What are some like under the radar things that like maybe when you're going to sit down for the halftime report, you're like, should I talk about this name? Because do the people really want it? Our listeners really want to hear some stories that we're just not talking about all day on CNBC and thinking about, you know what I mean, that are like A1 in the Wall Street Journal.
Yeah. I like Ingersoll Rand.
Okay.
Which is not unknown or undiscovered, but I don't think people talk about it. I don't think it gets a lot of attention. It's all on this onshoring.
And just give me in a nutshell what the onshoring thesis for Ingersoll Rand. What is it?
Well, the onshoring in general, right, as the kind of like build the country better, whatever you want to call that. We have $1 trillion in bills that got passed that are going to help our infrastructure. Whether it gets there or not, that's another question. I'm in the mindset that it has to. You have the whole semiconductor, the CHIP Act. It takes.
So you like Broadcom? You mentioned.
Yes. But for Ingersoll Rand, you need materials to build this stuff, right? I recently bought back Freeport-McMoRan because you need copper to build things, right? So this is a great company with dominant share. They have a huge backlog, double-digit backlog, margin upside of about 200 basis points. And again, it is kind of the onshoring theme as we build these plants and we build bridges and we help on the roads and everything else.
So this is a longer term thing because you're not like some of these stocks have probably benefited a little bit from the passing of these bills over the last 6 months or whatever, but they're not likely to see orders right away from that sort of thing. So it's like thematic, and you want to buy them at good valuations.
Yeah,
it sounds like.
And I do. And again, kind of a little bit off the radar. Okay, so another one that's not probably on the radar, but it's been a hell of a stock year to date is GE Healthcare. Yeah. So GE, I own GE too, which has also been a good stock.
What's going on in GE?
So they spun off GE Healthcare. They're going to spin off the renewables business, which is terrible, in January of next year. And you know just as well as I, when a company spins off, not only do the spins do well, but the parent company does well because guess what? Everybody was too disorganized. They were everything. You couldn't appreciate anything because no one could put a ton of attention into anything, right? It was conglomerates. They don't work. Period.
This is the first reverse split in my memory that has actually worked really well. Is that fair? Usually they go back to where the stock was trading before the split.
This is true.
Yeah.
When Larry Culp joined the company a couple of years ago, he was at Danaher. Just go look at a chart on Danaher over the years.
DHR, is that the ticker?
Yeah. It's a phenomenal company. He ran it exceptionally well. He retired and then he went on the board of GE, and then we had all these problems with management and at GE, and they decided to hire him, and he has done nothing but execute on the plan. He's he's going to spin off all three. They have the world-class aviation business, right? They make the engines for Boeing and Airbus. And it's like they are the best. They are the number one player, and they do it really, really well. It's always been the gem of the company, but it never got appreciated because you had problems in healthcare and you had problems in renewables and all that sort of thing. So they spin it out. They spun it off GE Healthcare. So I like the GE piece because I like that it's going to eventually be a pure play on aviation, and I like management. And that's going to help. By the way, free cash flow is going to continue to improve as the whole Boeing thing gets better, and as I think you're going to continue to see growth in aviation. I mean, you have a duopoly. You've got 4,000 to 5,000 planes in the backlog at each company. So they are the ones that are providing. So anyhow, that's GE. GE Healthcare, it's been around for 125 years. And they have an exceptional client base. They also have focused on recurring revenue and digital within their business. And this is think about imaging. When you go to the hospital, you think of most of the equipment you see in a hospital is GE Health. Anyhow, their margins were at 17%. Siemens, which is a competitor, margins are at 23%. If Siemens can get 23%, GE Healthcare, which is a better product, better clientele, and also they had some supply chain issues in China. As that get resolved, I think that could catch up, and I love a margin expansion story.